Ladies and gentlemen, welcome in to yet another On the Road live stream. I am excited to talk with you guys today. I am in all black, aka mourning for having to hedge the portfolio. But we'll get into that more in detail in due time. I'm going to give everyone a minute to join the live stream if they choose to attend today's stream. I am currently in New York, and so just been traveling around like crazy. Again, sorry, I understand that every time I go traveling, the market tends to have some extra volatility, but unfortunately, I need some buying opportunities. Thus, I have to travel occasionally in order to make the market go down so I can get into positions. I'm just kidding. I wish that was that calculated. Good morning, Zaj. Welcome in. Happy to see you in here. It's been super irritating, and I would be live from my computer, except for the fact that the charging cable for the computer does not have enough energy going into it to keep the computer charged while I use it. So I have to do my work on the computer in sessions. So I have to keep it plugged in while it's closed, and then I just got information. The US is now considering a 1-month delay on tariffs, I'm assuming. On tariffs for both Canada and Mexico as per Bloomberg. All right. Exciting. So tariffs might have just gotten delayed by a month. So I imagine we're seeing the market rebound just a little bit here. Good morning, MK. I got my energy drinks on deck today. But today we're going to talk about a trade that I just entered pretty substantially right before the live stream today. And I know it's not exciting. It has nothing to do with crypto, the trade that I entered into, but I do want to tell you guys what the trade is because I am hedging my portfolio, right? I'm not getting out. I'm keeping all the positions that I have in crypto. In the last run up that we had, I had taken some profits off of some of the projects, not nearly enough, obviously, because we all tanked thereafter. Good morning, Camille. Good morning, Zach. Everything tanked thereafter, so honestly, hindsight's 2020. I should have taken a lot more off the table than I did, but I did take some, and so I'm using that to enter into this hedge for the rest of the portfolio. I do not think that the cycle is over. I do not think that we are going to experience a massive year-long bear market like we will at the end of this year. However, I do think that we're about to experience / are in the middle of experiencing some pretty aggressive market turmoil. And I'll get into the whole thesis behind it in just a moment. But the two things I wanted to tell you guys is that I have a degen type hedge, and then I have a hedge that I did with one of my retirement accounts. So I took the entire retirement account, sold out of all the positions, and entered into this hedge. And then I'll tell you guys a little bit more about the more degen type hedge that I entered into, which has a time limit. Mods, get this bear. No, it's just, I think we'll still see a 4-year cycle, and I think that we'll see crypto, specifically altcoins, start rallying once QT has ended and QE is in place, i.e. the Fed has cut interest rates and stopped quantitative tightening with the $55 billion a month that they suck out of the market. That is ending. They already said they're about to be ending that. And I think what Trump is doing right now is forcing the Fed to lower interest rates. And so the play that I have is a play on making money on the Fed suddenly lowering interest rates, which I think will happen this year. I don't know exactly when this year, but I think this year we will see a very drastic switch up from the Fed. And the reasoning behind this, has nothing to do with inflation, has nothing to do with the crypto markets, has nothing to do with anything that you're imagining. All it has to do with is the fact that the United States has around $7 trillion worth of debt that is coming to maturity this year. And interest rates right now are currently higher than the average that the United States pays on their debt. And it's higher than the maturity, or it's higher than the interest rate being paid on the debt that's coming to maturity this year, the $7 trillion. Thus, knowing that the United States currently spends more on interest rates on their debt than they do on the defense budget, which we know the defense budget's disgusting. They're spending about all of the deficit almost on just interest rates. And so if this $7 trillion, which represents 22% of the total debt that we have as a country, if that goes and rolls over at the current higher interest rates that we're experiencing right now, then it just exacerbates the problem even more. And I'll pull up some charts and stuff to show you guys so that you can see visually what I'm talking about. But the play basically is that Trump is causing a ton of economic uncertainty and fear in the market to cause the market to go down, to cause the Fed to freak out a little bit, and then lower interest rates so that the debt this year can be rolled over at a lower interest rate so that we don't go bankrupt as a country, right? So temporary pain that I think we're experiencing right now. I do think it's going to get a little bit worse. Therefore, I'm hedging my portfolio because I don't think this is the end. I think that all the positions I have, I'm comfortable holding for a long period of time, hence my investment strategy. I don't like selling prematurely. So I'm just going to enter into a hedge, which I did today. Again, I rolled one of my retirement accounts entirely into bonds. TLT, I know, super exciting. Ooh. TLT is a 20 plus year duration bond from BlackRock. It's iShares. And so it is the most sensitive to interest rate changes. And so as they cut interest rates, the price of TLT should go up because I'm purchasing bonds that have a higher yield. And then if they cut yields down, but mine's locked in at 4.5% and they cut it down to 3%, let's say, then people are going to pay a premium for 4.5% interest on their money as compared to what they could get in the open market at 3%. So by buying these now before they cut rates, I think I'm locking in some potential good gains. And worst case scenario, I'm dead wrong. And I've locked in 4.5% interest rates on my retirement account, which is not amazing, but it's still gains. So I'm still going to make money, even if the play doesn't play out like this. Now, that's the safer one that I went with. The degen play, which I can show you guys here, as soon as my laptop finishes charging up here, my degen play is some leaps on TLT. So I bought some call options on TLT with the anticipation of, again, that sudden rate cut that I think will come potentially in the next like 3 to 6 months. But let me know what you guys are thinking. Am I looking too deep into it? Do you think I'm onto something here? Are you guys as mesmerized by this single curl as I am? How's everyone doing? Good morning, Seedling. Good morning, MK. Good morning, name that I can't pronounce because it's in a different language. Good morning, Ollie. Good morning, Too Much at Once. Good morning, Jordy. Good morning, C90. How is everyone doing on this wonderful Wednesday afternoon? It is 12:09 Eastern time. We go live Monday through Friday, 12 p.m. Eastern Standard Time, to talk about decentralized science and the broader crypto markets. Today, we're not so much fine-tuning in on decentralized science. However, I wanted to tell you guys this hedge that I opened up because if everything goes right, I can take the money from the hedge here and rotate it back into crypto markets or back into whatever I want if everything goes okay, right? Because them cutting interest rates and starting to print some more money would cause altcoins to start going up. Different setup there, I know. It's because my laptop here. This was the first purchase I made after starting my company. That was the first purchase that I made after starting my company, was this laptop, and it is starting to shit the bed. And so I think it's just the charging cable, though. I think I just need a new charging cable. Pat's making his Broadway debut. No. What's good, Dr. Crypto? No, not Broadway. I think people in politics can create a disaster so they can save us, so we thank them for saving us when they are the ones to blame anyways. Yes. It is all a mental game. And so if you can put yourself in a position that supersedes their mental game that they're playing and you can see through, right? Get out of the cave, go look at what's actually going on. I think that you can profit pretty solidly off of it. Seedling says, I need a Mac. I know, but they're confusing and difficult to use. I want the right click. Why do Macs not have a right click? I want a right click button. Not sponsored, although it should be. All right, let's open it up, and I'll show you guys some of the more detailed reasoning behind why the F, some guy who's usually in the most degenerative type of gambling investments, decentralized science, a niche within a niche within a niche. Why is he buying bonds all of a sudden? Why is this page, which always talks about DeSci, not talking about DeSci, and in fact going to be talking about the bond market? Well, let me show you this really quickly, okay? Let's get into it. So this was a post made by the I don't know how to pronounce that, but you guys have seen them before, I'm certain of it, if you guys are in the financial markets at all. So February 4th, so 1 month ago. This is insane. In 2025, $9.2 trillion of US debt will either mature or need to be refinanced. The US now holds $36 trillion worth of government debt, meaning 25% of the total debt is set to mature this year. Look at that graph. Look at that graph. $9.2 trillion of debt maturing in the year 2025. That's this year, currently speaking. If that in debt matures right now, they can't pay it off, which means they're going to have to refinance it, right? We don't have the surplus to pay off the debt, so we're just going to have to basically take out a new credit card to put the debt from one credit card onto the other credit card, right? That's basically what's going on right now. And so in order to do this, they have to refinance that money with new debt that they issue. That new debt, because of where the current interest rates are, let's go to the Fed futures to see current interest rates. The current interest rates that they would be financing it at are right here at 4.25 to 4.5% interest, okay? Currently speaking, I believe the average interest on all of the debt, I think they might say it later, is like 3.2%. So they would have to pay more money, right? They would have to roll it over at a higher interest rate, meaning they're gonna have to spend more money on that debt. So for some context, the US has added $23 trillion of debt since the '08 crisis, 230% increase. Since 2020, total debt is up 13 trillion, $2.6 trillion per year for 5 years straight. That's absolutely insanity. The debt has been fueled by unprecedented levels of deficit spending. The US deficit reached 1.8 trillion in 2024, or 6.4% of GDP, right? You see these graphs. None of this is new information, right? I know retracted messages play games with Patrick's mind. They really do, C90. I don't know why you got to be like that. Buy Dynex. I love Dynex. Big fan of Dynex. But that's not what we're talking about right now. Right now, I am buying bonds. As they flood the market with bonds, bond prices fall and yields rise. It's simple supply and demand. This is why real yields have moved in a straight line higher since 2022, suggesting higher inflation isn't the primary driver behind the recent moves higher in rates. So this is the 30-year actually. I was thinking it would be the 10-year, but this is the 30-year bond from the United States. So the rate has been skyrocketing, meaning the price of the bond has been tanking, right? If we look at the chart here, I think this is bottoming out action. And I've been waiting since back here to actually pull the trigger on this trade. And I think we've gotten enough. I think we've gotten close enough that it's actually time to start triggering this trade. And so we keep going a little bit further. The 10-year note has raised by 115 basis points since rate cuts began, which means that the real interest rates that the economy uses has been going up despite the Fed trying to cut rates. Now, I know the Fed paused rates right now, but the real yield or the real rates that the economy suffers has been going up because the government is refinancing so much, right? So 9.2 trillion is what needs to be refinanced this year, which is a godly amount of debt to have to refinance. Let's see the next. Yeah, here it is. So the Treasury debt on average right now is 3.2%, the highest since 2010, right? So it's been going up so much because we keep refinancing at these higher rates. And so I believe what Trump is currently doing right now is putting pressure, aggressive amounts of pressure on the economy, on the Fed, to force the Fed to lower interest rates so that the United States can refinance all of this debt right now. And I think he's doing a damn good job at it, right? Because the Fed reacts to the market. The Fed makes policies depending on how the market is doing. And so by Trump coming in, causing all this uncertainty and fear, people are fleeing the market and actually seeing some massive discounts on a lot of stocks and cryptos and stuff. But the Fed is watching that and kind of in a situation where they have to lower rates. At least that's the thesis behind the trade. Again, the core trade in my retirement account, I just moved it to bonds, right? That's easy. I might not get crazy gains if I'm totally wrong, but I get gains nonetheless. The thesis where you guys are probably going to be interested in is me purchasing Leap's call options that expire in January of 2026 is a little bit more degen, but I have, again, 10 months for this to play out, 10 months for them to resume cutting rates. Yeah, the rest of that's not super compelling, but basically we can go look at TLT options. There was actually another thing I wanted to show here, but oh yeah, here it is. Here it is. So this was posted by Wall Street Mav. U.S. government revenue $5 trillion in 2025. U.S. government spending $7 trillion. Budget deficit $2 trillion. National debt $36 trillion. Interest on debt is $1.3 trillion. Okay, so this interest on debt, if they have to roll over at a higher rate, right? We saw that they're currently paying an average of 3.2%, and currently interest rates would be 4.25% for them to refinance that $9 trillion. We're going to see this net interest on debt increase quite substantially. Now, I didn't do out the math, so I'm sorry. Someone could probably do out the math and get an accurate figure, but the deficit on the budget is basically just interest payments on the debt. So they need interest rates to come down. And, when interest rates come down, TLT goes up. And so I'm not expecting like crazy moves on TLT. I'm expecting us to come probably back up to 117 area on TLT, which would be a 30% gain. But the key is, I think this is going to happen quickly, and bonds are not supposed to move that quickly. Anytime bonds have skyrocketed like this, has been great opportunities to make a good amount of money off of it. Remember during the 2020 pandemic, the crisis here, when all of a sudden in like a single day, they slammed interest rates down to zero. It was over the weekend actually. And look at that volatility that ensued on TLT. I made some good money off options on that because things just looked suspicious. Like we aren't supposed to get crazy runs like that. And so premiums on options went up, which is where I think most of the money would come from this type of a trade. If we do in fact see emergency cuts here in the next quarter or two, or even 3 quarters, because again, these leaps are not set to expire until January of 2026, then we see premiums skyrocket. I think that this move up to 117-ish, which is correlated back to this support line here, I think we see it as resistance. That move, that 30% gain, I think would actually yield out to like 200 to 300% gains on the options. So it's a more degen play, right? Because there's a time limit set to how long until they cut rates. But I think that this year they're going to be forced into cutting rates so that the government doesn't go bankrupt. Get the thesis? Beautiful. Questions on the thesis. I did assume that all of you guys are well versed on what options are. I assume most of you guys know what options are, but we can talk about them if you want to. But really anything. MK, your thesis on is one last push higher, and that's the last bull leg. SRSI weekly chart is at bottom and ready for a cross up. One last push, and we are done for this cycle. Ooh, that would be scary. Not that scary, to be completely honest. I could see that on the weekly. I could stay up there for several weeks too. Yes, I believe bull will be over at that point. That would match 4-year cycles. It's hard to make 20-year T-bills interesting. It is. However, I took 20-year T-bills, and then I put them in an ETF. So I didn't do this, but they have derivatives of the treasury bills. And then I am trading a derivative on top of the derivative, which implies 100x leverage on the derivative of the treasury bills. So all of a sudden, I've stacked risk on risk on risk to make it interesting, to make it fun, to make it potentially worth people's attention. It's a hedge, right? So I'm not going full porting into it. I'm putting enough money into it where if it's true, then I make some semblance of gains. Remember, 200 to 300%. So put a few $1,000s into it, maybe depending on your portfolio size. And then what would correspond with that is the market would crash pretty quickly. And so then I could take the money from that, buy the dip, and then ride as we get that economic easing happening, right? You took the least risky play and made it full risk on. Yeah, hell yeah. Now, I didn't do it in my retirement account, but I'm doing it in my regular account. Hope for good unemployment update. I've been unemployed for years, Spiegel. Hopefully that's good. I have to sneeze. Praying for the downfall of normal people's jobs and they trying to stay afloat. I know, it's rough. It's very rough. It's not a fun game out there. I mean, it's a lot of fun, but it's not fun if you really think about what you're doing, right? Because, yeah, whatever. I'm essentially making a bet that we're going to experience a lot of turmoil. Unemployment will go up. People won't be spending as much money because they're just going to try and make ends meet. And by doing that, we would make a little bit of money because the Fed would be forced to make the economy more suitable for people who are in debt. Because the United States government is the number one thing in debt right now. It is wildly in debt. And so my play is that the government is going to be influential enough, which I think we're seeing it. I think the writing's on the wall right now. You go look at the bond yields on European countries, they're skyrocketing right now because of this trade war. I think part of this trade war is to put enough tension on the global economy through the president, through the United States government, that the Fed has to back off a little bit. And we also saw some of that nonsense going on with the debt ceiling again. Woo! The debt ceiling obviously is going to get raised, but until we have a complete clarity on everything with it, which it might be, I have not looked in the last week and things move pretty quickly, the Fed is not going to be sucking out the $55 billion from the economy. And that is QE. That is the beginning of QE. And so basically, I think it's already starting to play out and the prices haven't moved yet, which means there's potential opportunity. Now there's a flex. I've been unemployed for years. Oh, it's not a flex though. Really not a flex. You guys should have recurring income streams. It's the best way to make sure that you don't really care what happens because you can just continue to dollar cost average in. Bring the pain, get rid of this debt-based currency. I don't think it'll get rid of it, but I do think it'll prolong its existence for a little bit longer. I think we're all probably on the same page with that, Dan, that, I mean, this will inevitably end up destroying itself as every debt-based currency does, but I think we got some time left in it. It's interesting, too, because the dollar has been going down. Bonds aren't really moving, and all assets have been going down as well. So people really are just fleeing. People really are just fleeing. We'll see, though, because on the flip side, if it doesn't end up working out, yields have to go higher because the government's going to be issuing so much more debt. And so supply and demand, if they continue to issue new debt, that's going to make yields go up even higher because the treasury, the yield, the bonds that they end up issuing, the T-bills that the government ends up issuing is going to flood the market, causing the price to go down, which makes yields go up. So if I'm wrong and the Fed does not budge, I think we see some pretty atrocious results to this trade. But that's why it's risky. That is why it's risky. It's much easier just to purchase the bonds themselves, but you're only going to maybe make the 5% yield yearly and a little bit on the underlying if it does end up, if we do get rates back close to zero, then you see those start going up a bit. But we shall see. Now, in other news, I've been here in New York for a day now, a day and a half-ish, and I have been relentlessly building out automation workflows. And we have 27 people here, so I want to take a second to kind of address something that's been weighing on me pretty aggressively when it comes to my personal content creation and the lack of content that I've put out recently. What would happen if a banking collapse happens? Not sure it will affect us, but I don't know how. If a banking collapse happens, it affects everything. It affects everything. You can go see every time banks start going underwater, they have to default on their creditors, their debtors. And guess who's going to end up paying it? Us. Every single time. It's the same thing that happened to FTX, but on a much larger scale. The people who end up paying for it are the people who put their money with the banks. And I know there's a little bit of reassurance, but if we end up getting a debt crisis and banks start failing, the government will pay for some of the debt, right? Up to that $250,000 you have in an account. What are they going to do to pay with? They're going to issue more debt to pay that to you. So it's going to just cause more inflation. It's just going to cause more devaluation of the dollar. It's just not a good situation to be in. Who knows? We'll see. I don't know. Like, although that's actually a good point, because the Fed has to see that, right? So if the reason banks started going bankrupt is because after the '08 crisis, the government demanded that banks hold more treasury bonds than they initially had, right? Because it's safer. But then when the Fed started raising interest rates, what we saw was that those bonds that they were holding on to became less valuable, meaning there was a little bit of a no longer having the proof of reserves, right? They didn't have the money to pay when people started asking for the money. So we started seeing banks collapse in 2022, some of the more unstable banks, and they got absorbed by some of the bigger ones. If rates continue to go higher, right? If Trump puts all this pressure on the economy, which is kind of inflationary, and the Fed doesn't budge, and the United States has to roll over all that money, all that debt, into new issued debt, we're going to see rates go up again, which would cause a lot more banks to start going bankrupt, which would be a lot worse for the economy than just lowering interest rates a little bit, right? We'll see. We will see, though. I don't know. None of us really know. It's just been a lot of mental real estate on this. And I do think that in the long term, rates come back down. It's just a matter of predicting when. And I think we're at that point right now. Now, after rates come down and after all the turmoil is settled and all that money starts making its way into the economy, I think we see the next leg up for crypto and everything. But I do think we'll see some turmoil between now and then. And I know we're starting to see it already, which is why I'm not necessarily selling anything to do this hedge, and I'm rather moving my retirement accounts around to do the hedge. And I'm rather changing around some of the money that I had sitting on the sidelines so that I could survive, putting that back in the market, because that's always a good idea. But one of the things that I wanted to talk to you guys about that's been weighing on me, I know you guys are chilling here, waiting, chomping at the bit for me to say it, but I have not been making nearly as much content as I had been making before and as my goals are to produce, right? I want to be going live daily, which I do okay at. I want to be putting videos on X and YouTube on a daily cadence, which I have not. Even 3 times a week I'm okay with, but for the last month and maybe even 2 months, I've not been making the videos. The reason being is because I have backed myself into a little bit of a corner here, being someone who talks exclusively about decentralized science. And initially, all of my content was just documenting my journey through the investment markets, right? For example, this hedge I'm putting on, naturally I would make a video on this hedge explaining it to people and posting it out there so that I'm just documenting my journey. But any content I put out there that's not DeSci focused, I get a lot of pushback saying, have you abandoned decentralized science? And the answer is obviously no. My entire portfolio is in decentralized science. It's just that my attention, while we're waiting for the market to turn around, has gone elsewhere. And where has it gone? It's gone into artificial intelligence. It's gone into automation workflows. It's gone into creating Agent Bill. Agent Bill being the pinnacle of DeSci influencers and DeSci resources. So while I'm still funneling all my energy into advancing decentralized science, I'm having to pause my research into DeSci to research AI to be able to create the automation workflows and the agent workflows to actually build Bill out so that I can get the word out about decentralized science more extensively. And so moving forward, probably once I get back from New York, will be making content around what I've been learning with AI. So that is the different workflows, that is vectorized databases, that is chunking information so that you can put it in the databases, that is what is an LLM, that is how is AI and AI agents different, that is whatever I want to talk about, but hopefully you guys are okay with that. I think it's valuable information because all of you guys should be trying to learn AI anyways. I just don't want you to think that I am changing my opinion on decentralized science or retiring from being a DeSci influencer. I'm still pushing DeSci. I just need to document my journey through everything. Otherwise, I'm just not going to do it. And so that's where we're at. Cool? Sound good? C90 says, makes total sense. Can I get a 1 in the chat from you guys if you agree or are okay with that style of content coming out? because one of the things that I just was working on this morning, and I'll show you it actually if my computer still has enough energy. David Curie says 1. Dr. Crypto says 1. Let's go. Let's showcase. Also, before I showcase it, I want to show the TLT chart one more time, but on the daily chart with daily candles, so you can kind of see. It's looking like kind of a good time for this trade, right? It's bottomed, it's showing signs of strength. It is getting actively rejected, but this is kind of a little bit of an uptrend for a couple weeks. And I think this is just a dip in the uptrend. I do think we break above this. If you want to be more cautious, wait until we move above the 200-day moving average, build support, and then see if we can get that big move up, right? I'm looking for stuff like this, but more extensive. Now, let me turn it to this water bottle for a second while I make sure that none of my API keys are showing for this. Okay. So what I've been working on today, this morning, because Amanda got me up at 5:30 this morning to start working. This, I know you can't really read what this is. Yo, MG, what's good? Dan the man, +5 plus, or 0.5 plus 0.5. Let's go. I see it on the bottle reflection. No. Okay, what is this? This is an application called N8N, all right? N8N. This is something that I think if you guys are interested in artificial intelligence, you should take a look at this because it allows for you to create AI agent workflows without needing to know a lot about coding. So what do I mean by this? What you're looking at right now, each one of these little boxes is called a node. Let me see if I can get like a stand. Hold on. Each one of these little boxes here is called a node, okay? And so inside these nodes are little predefined snippets of code. So I have the trigger node here, which is a form. I can fill out a form. What is that form? Well, for this specific agent workflow that I've created, it is a research question. So let's say you have a question. How does marijuana usage affect REM sleeping patterns, right? So I would test this workflow, and in the form here, I would type in, how does marijuana usage affect REM sleeping patterns, right? And then I submit the question, submit the form. And then all of a sudden you see this agentic workflow, this AI agent, which has multiple agents embedded within it, go scour the internet for academic literature based off of my question to develop a PDF for me so that I can have research done automated for me. And it comes with citations, it comes with like 10 to 20 pages of research, and it actually is pretty useful. However, I'm struggling right now because every time we get through this section of the agent workflow, it starts breaking and I have to troubleshoot it. And it has embedded right there, I don't know if you can see that, but embedded custom code sections in it. And it's pretty powerful stuff. And so this is what I've been working on relentlessly. Now, this one agent workflow is super interesting and powerful. And what happens at the end of it is it spits out, see, it always errors right in here. So let's see if it goes through with this one. At least it errored this morning when I was trying to work on it. No, it might be stuck here for a while. But what ends up happening is the PDF gets spit out here. And then I take that PDF and I've made another agentic workflow which auto chunks PDFs into a vectorized database. So then I can upload the PDF into that. It will auto chunk it into a readable format for the AI agents. And then I can build customized AI based off of research that the AI is doing. That makes sense? It's pretty crazy. So that's what I've been working on. All this to get, oh, it went through it. Oh my God, I didn't do anything. It was broken this morning. All I had to do was let it like sit for a minute. Let's fucking go. Let's go. I've been working on this thing for fucking days. Okay, but all that to be said, I have now, I think, gotten to a point where I can actually implement some of these agent workflows to Bill so that Bill can actually have the database that is required to make him truly intelligent, right? Fuck. Problem in Node, create HTML snippet. God damn it. That's all right. That shouldn't be that difficult. I think it was almost finished. Do you feel like Tony Stark? A little bit. AI fixed your errors. It does. I know. No, but that's the crazy part is I don't actually know how to code, Dan. I really don't know how to code. I don't really know what I'm doing. But the cool thing is, right, it gave me an error. I can now go to that node. I can click into what the error is. I can read it. If I can figure it out, which I'm trying to first, I always try and figure it out on my own. If I can do that, then we can move forward. If I can't, they have a pre-built-in AI assistant that you can then ask it. It scans all the documentation for the platform and tries to implement changes for you. It's really, really powerful. Again, that website is N8N. And so my goal after I've done this research agent is to go back, create an agent that can scan GitHubs and GitBooks and give me PDF versions of them to then upload to the PDF chunker and create the databases and continue moving forward, right? So I think it's going to be really, really powerful. And this is kind of the content that I'd likely end up making. You know what the craziest part about this is, though? I didn't tell you guys yet. I'm pausing for dramatic effects. Oh, it's crazy. There are different people who have created these workflows already that are templates on the website. So you can just, once you understand how it works, you can just download the template, plug in all the API calls and API keys that you need to do the API calls, and then just let it run. You don't actually even need to create some of these workflows. Now, customized ones you do have to create, so you have to learn about it, but there's a lot of just pre-existing templates out there that are really, really fun. What do you know about Dynex for this month? I know that they're going to Amsterdam, and I know that they have some pretty crazy announcements coming while in Amsterdam. I know that they are sponsoring that event in Amsterdam. I know that the crypto task force is in full effect finally. And I know that the DNX token is wildly undervalued compared to where I think it should be. With only one arm and not much to do, I could have been helping you with this. This is true, MK. You actually could. That's another thing. I want to figure out how to get more engagement from everyone with building out Bill, but the value proposition needs to be there a little bit more, I think. There's not enough incentivization. Now, obviously there is with the token. There's a lot of incentivization behind it, but do you follow any AI influencers that teach you this? Yeah, actually, I'll give you a couple people that you can follow. If my computer has enough energy for this. If we go over to a YouTube, a lot of them are on YouTube because a lot of it's really fascinating, but it requires a lot of explanation. Okay, so this guy's really good. Cole Medin. I built the ultimate N8N RAG AI agent template. That's really, really nice. I'll probably honestly be downloading that later today to try it and see what it works with. But Cole is really good. He also just created an AI agent that makes AI agents. So that was literally yesterday's video I think he posted. And then the other people, the other person, let's see. Well, let me just go search N8N. I think he's got SEO pretty down pat. This guy, AI Foundations. He's really good as well. He is really good with his content. I enjoy his content, but really, this is also new. You go online, people are trying to gain market share in influencers. Like influencers right now are trying to gain market share in the AI content generation field. And so what's happening is they are basically just pumping out content to give away as much value as possible so they can accrue as many followers as possible. In doing that, all of the resources are being put out in the public just for us to consume without any real upfront cost. Now, you are going to have to, like, if you do this, you're going to have to pay for API keys to OpenAI, right? Because a lot, or DeepSeek or Grok or whatever AI model you want to plug into N8N, but it does not come with AI models. You have to go get your API keys to get those models. But the other cool part is, come here, you ready for this? You can fine-tune your own model on OpenAI. You can actually fine-tune your own LLM, upload your own information, make your own personality, make your own AI agent that you then plug into these automation workflows. It's really, really powerful stuff. Haven't been keeping up with Noble Blocks. Any updates on it? They issued the Nerd Bunny, which is yes, no error, but for Noble Blocks. I believe that's up and functioning right now. And that is the most powerful update that they've done. So they've begun issuing and updating new features for the platform, and one of them is that AI that goes and reviews academic publications for any potential errors, so that you can actually get more value out of posting on Noble Blocks than any other platform out there. A researcher can now go upload it and get their stuff reviewed, which is pretty crazy. I think that's the only update though, but if MJ's in the chat, he might know a little bit more. Again, all of my attention, all of my mind share has been focused on AI right now, because we're at the precipice of something crazy. Because once all of these automation workflows are done, and I've actually built out different AIs, we can actually start plugging and playing, take what's there and plug it in on other applications to create more powerful workflows, right? What do you use these for? Literally anything. These workflows, let me open my laptop back up. I'm trying to give it time to charge here so that I can get to work right after this, but it's a lot of fun. Let me show you one. Let me show you a fun one that I created when I was getting into it a little bit more. Let's go here. Let's go to here. Let's go here. You ready? You guys ready? Okay, I have to make sure the triggers are all set up. Yeah, there we go. All right, so I'll come here to this workflow. I'll test workflow, right? Then I will come here to Telegram and I will write in, hold on, let me put this down for a second so I can write, give me a recipe for chicken parm for 4 people. I can hit enter. Then we can quickly come back to this automation workflow. It's waiting for a trigger event. Hopefully I didn't shut it off by accident. I might have turned it off. Oh, there it goes. Dun, 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 dun. Okay, we go back to Telegram, and you can see I have an incomplete ingredient list for chicken parm and step-by-step instructions on how to make chicken parm. Now, the preheat oven to 200 degrees Celsius. I don't really like Celsius because we're in America, baby, but the proof is in the pudding there, right? So made a little chatbot agent that gives me recipes. Now I can fine-tune the model to do anything I want. The premise is there. I made a little AI chatbot on Telegram, which is not novel by any means. Everyone has these, but I made this one, which is cool. And then there's other things like email aggregators. So I made a little email aggregator which checks my inbox every hour and then reads the email, puts it into a table for me, sends me a message if it's an important email. If it's just spam, my computer just died. If it's just spam, it just marks it off as read and continues on. If it's important, it sends me a message on Telegram to go check my email. And I can then go check my email, see what information it was, and I even have it so that it will auto-respond for me if I want to, but I was playing around with it, and I have it auto-respond in haikus. And that's all very possible with no code. I don't know how to code. But you can do anything, really. You can automate any kind of workflow you want. But that's, yeah. All right, ladies and gentlemen, auto respond to emails, exactly. Your time is your most valuable asset. Hopefully this was worth investing it into. Go look into the bond hedge that I've opened up. I might be a little bit early to it, but I think that it inevitably has to occur. It's good. I could use with Discord to respond to comments. Absolutely. Make propaganda bots. I mean, yeah, you absolutely could. The only problem is on Telegram, if it's in AI, it has to have the word bot at the end of it so people would notice. But still, have you ever heard of Ribbit, Pepe's brother, created by the same developer? I don't care about that kind of stuff, John. I'm not interested in losing money on meme coins. What's going to happen? Pepe's brother, Ribbit, is going to have a token launched. The insiders are going to snipe it and distribute it everywhere. And then I'm going to put money into it and they're going to sell and I'm going to lose all my money. And so I'd prefer not to gamble on things and get actually scammed. I would prefer to make stuff rather than literally just get scammed over and over and over again. So I will not partake in that kind of stuff. But I appreciate you letting me know of Pepe's brother. Write some code to make Dynex price go up. Oh my god. Could you share your top 5 most undervalued coins today? Yeah, number 1, Bill. Number 2, Dynex. Number 3, Research Coin. Number 4, Data Lake. Number 5, Poseidon. Number 6, Ondo. Number 7, Arkham Intelligence. Number 8, Ethereum. Number 9, Solana. Number 10, the bond market. I don't know. All right, guys. Thanks for being here. Peace.